Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. Hey, I'm just trying to make a little money. My job is not just entertain, but educate to teach you, show how it works. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. When you get an unemployment report that's basically uneventful, it allows you to focus on what's really happening in the market. And what's happening is, once again, a broad-based rally that encompasses many different and often overlooked areas that didn't get much love last year. And that's how the Dow rallied 238 points. S&P gained 0.65%, and the NASDAQ jumped 0.82%. We've seen breathtaking rallies in the data storage stocks. We also have some stocks that simply can't lift, and I got to mention them, Apple and NVIDIA. I know you want to know if it's over for these two members of the Magnificent Seven. I come at it a totally different way. I think both Apple and NVIDIA, the companies, are humming along, making a lot of money. It's simply that money managers need to sell something old if they want to buy something new. So their stocks become what is known as a source of funds. Do you know it's a time-honored tradition at the beginning of the year? I've seen it happen in January repeatedly over the years. You just have to wait these two out. You'll know when the selling's done. It's truly not over yet, or the stocks wouldn't start rolling over every day from the get-go. And you see it as well as I do. I say own Apple and own NVIDIA. Don't trade them. Nothing's changed for me, as members of the CNBC Investing Club know all too well. Are they?
The House of Pain.
Nah, wrong address. Okay, let's go to work here. Now, what are we doing next week? Well, first of all, we are headed at the beginning, Sunday morning, I'm going to a week at the beginning of the J.P. Morgan Healthcare Conference, okay? Now, look, this is a really special event, and it's way too important to miss. I'm going to interview a dozen CEOs to see what their plans are for the new year. Historically, this is a conference where people announce grand plans, including mergers and acquisitions. I've seen a bunch of stories break there over the years. I'm going to cover all the breaking news, especially the acquisitions. There could be a lot of them at this confab, maybe some big biotechs, too. One thing I can say about the J.P. Morgan Healthcare Conference, it's a market mover. You don't want to miss it. Some of these companies are going to announce things that are going to blow you away. Tuesday morning starts with the December Consumer Price Index, and it matters. Today, we had an inconsequential set of Labor Department figures that didn't really impact the stock market. I don't think the CPI will be weak. We're getting some indication that the holiday shopping season was very strong, the strongest in years. Look for some tension between the president, who's trying to contain inflation, and the consumer, who's borne the brunt of it, with the Federal Reserve in the middle, trying to figure out if it's safe to keep cutting interest rates in a rising inflation environment. Tuesday also marks the start of earnings season with none other than the quarterly report of, yes, J.P. Morgan. Now, I am worried about this conference call, not the quarter, the call. The stock's coming in red hot, and I don't think the company will be as ebullient as the stock would indicate. You got to remember, CEO Jamie Dimon has a certain style. When things are good, he likes to talk about what could go wrong, not what could go right. Things are good. That orientation is what often terrifies people, though. I want to emphasize I think J.P. Morgan's actual quarter will be amazing, but that's not the point. Jamie's cautious comments crushed his own stock last quarter. He could do it again. Remember, I told you, buy it into that weakness. I hope I can be as clairvoyant this time. My suggestion is wait to see if Jamie's worried, cautious, even pessimistic. Watch the stock go down. If that happens, you can pounce on some of it at the end of the day, and you buy some, and then you may have to buy some the next day. That's what happened in the last pattern. Delta reports, too, and I got to tell you, the airlines are putting up some terrific numbers. I expect a fine quarter from Delta, as it's arguably the best-run airline. Wednesday morning, we get not one but two key numbers, okay? We get the retail sales and the producer price index. Now, these numbers, like the CPI on Tuesday, could give the Fed cover to bless us with rate cuts. Of course, there's a caveat here. Unlike the CPI, these numbers are on a delay. They're from November, thanks to that backlog from the government shutdown. I think December was a strong month in the country with big holiday spending. That will not be included. Wednesday also brings more bank earnings. The star most likely will be the one that's been the star for a while now, Citigroup. It's gone from ugly duckling to beautiful swan, but the analysts haven't caught up with the new numbers yet, so it just keeps surprising the upside. We get the upside estimate revisions, and then the stock flies. You know what? But it's not the only one. We also hear from Wells Fargo, which we own for the Charitable Trust. Now, this bank stock has been fabulous to us. And Charlie Scharf, the CEO of Wells, has pivoted the bank from a plain old banking company to a full corporate and individual bank, which includes a lucrative merger and acquisition package. They're on the Netflix deal. Wells is constantly paring costs and surprising us with its efficiency. I am optimistic. Maybe he talks a little about how AI is helping them. He's a visionary, Charlie. Bank of America reports, too, and it's been consistently good with very few surprises. I expect none this time, just a solid growth quarter that will help drive up the stock over time. Thursday, we'll get some fireworks. Two investment banks, Goldman Sachs and Morgan Stanley, should both report excellent numbers. The amount of activity in financial markets is unusually strong. The asset gathering of Morgan Stanley has been extraordinary. Ted Pick, good job there. Goldman's takeover business should be tremendous, David Solomon. I expect number increases for both Goldman and Morgan Stanley. We also get to hear results from BlackRock. Remember, they have the most money under management of any company on earth. These guys have been emphasizing all sorts of new kinds of funds. So when the largest repository of money reports, I think it's going to be able to a pretty good number. Unfortunately, in a period when some banks are reporting extraordinary quarters, that might not be good enough for this charitable trust holding. Stocks within the same sector compete with each other for dollars. And right now, the banks are running circles around the rest of the financials. Taiwan Semi reports, yes, and that's the manufacturing partner of both AMD and NVIDIA. It should be a monster quarter, but I think everyone knows that. I want to point out that NVIDIA stock has been incredibly weak, despite a steady drumbeat of good news. Maybe a strong quarter from partner Taiwan Semi can help shake off some of the sellers. The winners in the semi area so far, though, have been the opposite of the very complicated NVIDIA. They're data storage simple names like Western Digital, SanDisk, and Seagate, also a little more complicated, Micron. These are the companies right now that are moving up, along with the semiconductor capital equipment companies, two that I'm focused on, Applied Materials and Lam Research. After the close, we hear from truck giant J.B. Hunt, probably seeing their trucks on the road. I think this group has finally broken out of its doldrums, the freight recession. I don't typically recommend truckers. Very hard business. But a good number from J.B. Hunt emboldens me to keep pushing Federal Express, FedEx. What a winner that's been. Raj Subramanian's just done a fantastic job there. On Friday, we get a big bank break when we can focus on just PNC, a regional bank that's been an up-and-down performer after years where it did nothing but go up. I prefer the other bank stocks. Now, the beginning of earnings season sets the tone for a bushel of quarters ahead. It makes sense. The banks always kick things off, and it's reasonable to extrapolate all sorts of trends for consumers, right, and corporations, for the financials. The bottom line, a strong start to earnings season could lead to a nice tone going forward. Yes, you can take your cue from the bank earnings. And you know what? I bet they'll be darn good ones. I want to start with Gregory in California. Gregory!
Happy New Year, Jim. And happy 21st on Mad Money.
Thank you, Gregory.
Congratulations.
Thank you very much. You're always very kind to me and to our team. I really appreciate it.
Not at all. I think you've lasted now longer than half the companies that we've talked about on the show. It's incredible.
Thank you.
Speaking of which, I need your help on something today.
Sure, I'm there for you.
Last Halloween, this company blew away the numbers in their quarter on every line, including Q4 guidance, and then they hit an all-time high of $260 and then started to sell off. So I started a small position and added as it continued to drop. And now I'm down 20%. So, Jim, other than profit-taking and scheduled insider selling, as long as they continue to execute, my thesis hasn't changed on Cloudflare. Has yours?
I just yesterday was speaking to a very large investor, and he said, what kind of companies are you looking at that you like? I said, well, I'm trying to buy companies that are down a lot, maybe, more than just a couple percent from their highs, that are run very well, that do good things, and I'm not worried about the quarters. You know what? That's Matthew Prince. That's Cloudflare, symbol NET. And Gregory, I think you buy a little more here, and if it comes down because the chart is ugly, you buy some more after that. And thank you for the kind words, as always. Let's go to Clay in Indiana. Clay.
Hey, Jim. Booyah.
Booyah, Clay.
The stock is Cheesecake Factory. It's been up about 8% this past week. Is it still a buy?
Yes, they really know how to run it. They are just a seasoned practitioner. They know how to do it. I think it's going to make a run at all-time highs. It sells at 13 times earnings. That's way too cheap for a very high-quality, still growth company, even though it's up 14% this year. I like it. Now, I've got to tell you, a strong start to the season of earnings week could set the tone for not just the rest of the year, but, well, I shouldn't say it, could set the tone for a long time. Now, you can take your cue from the banks. I bet they have good things to say. Well, Mad Money tonight, I'm digging into two consumer names that I know you like very much and are worth highlighting on a Sleepy Friday. First is Shark Ninja, one of the biggest comeback stories 2025. So can you continue to run higher? I'm taking a look at the appliance maker and giving you my take. Then, Ulta Beauty has been sitting at the top of the new high list almost every day lately. What's working in this beauty name? I'm going to give you my analysis. And by the way, ahead of our trip out to the JP Morgan Healthcare Conference this week, I'm getting a preview of the names and themes to watch with the top healthcare analysts at JPM. I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.